One.
The dog days of August. Is it too much to ask for a 3-day winning streak? We've only had two-day winning streaks, and well, we were doing okay today, but now in the red. Got some earnings reports, got some upgrades and some stocks we haven't talked about a lot. We got Ryan Dietrich at 8:35. Statman do. He's gonna set us up for September. It's Tuesday. We need a 3-day winning streak. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right, good morning, traders and investors. We're in the red by just about four handles at 44.38. We took out yesterday's high, but Europe kind of dragged us down. The buck over 104. That's not good for the market. That's up 9 cents at 104.08. Bonds right at 120, up a couple ticks. Consolidation here in the bonds ahead of the jobs number. Crude back up over 80, up 59 cents at 80.68. Gold down 230 at 1944.50. Silver going the opposite way, up a percentage and a half at 24.61. That's 35 cents to the green. And Bitcoin hanging in here. Consolidation, if you've ever seen it here in Bitcoin. I got the futures down 55 bucks at 26,035. Triple D, I mean, where has the retail trader gone? Where is the pizzazz in this market besides VFS?
Ha! It's all just VFS. That's all this market is VFS. The automotive maker that makes 40,000 cars projected to be worth more than Toyota, which makes 40,000 a day. It's trying to make 40,000 next year. Everything's a joke. But we're in August. We're in the dog days of August. We've talked about the seasonality. This is historically one of the slowest weeks of the year. So you're seeing some moves, but you're kind of just chopping around. There's no conviction in either direction. And I think that's because there's a lot of traders on vacation. So I think it's expected the volatility is going to be a little quieter this week. Yes, we have some earnings which are going to move. We have some individual stock stories as always. But this market, I think expect it to be a little bit quiet this week.
Yeah, I think so too. I mean, it's I mean, but like you talk about, selling the rip and buying the I mean, they're really that like a super rip yesterday? No, it really wasn't there. And the dips have been shallow too. So consolidation station. Let's bring in Money Mitch this morning here. And what's catching your eye on this Tuesday morning?
Well, we definitely got to be looking into what's going on, at least in retail. We keep getting more and more retail, so we'll take a look at that. But it just seems like tech can't get the rally. Of course, Nvidia has just been hanging out here. And it just seems like this is the time where I always talk about how a lot of times when the markets go sideways, I feel like institutions don't really get hurt in that action, but retail traders are the ones just getting chopped up in that action. We're seeing it on live trading. I haven't been doing that great either in the last week. And a lot of that is what? These kind of range bound moves. We're getting expansion on volatility, but it's not really in a trend. It's more just the range going up,
You get chopped up.
down, up, down. And as day traders, a lot of the times you're going to get chopped up in that action.
I think it's all
This is the
about two
market
switching
that,
styles.
sorry, what'd you say,
No, I
Joe?
just gonna say switching styles,
Yeah,
for
you sometimes have to.
adapting to the market. Okay, sorry about that,
Well,
Dennis.
it's the good week to really take off. I mean, this is a good week if you're, historically, one of the lower earnings weeks for me as well. This whole month, August is historically a lower earnings month because it's quieter. I make my money off of movement, off of volatility. I need stocks to move to make money. I'm not sitting here and, just, trading all the, obviously you trade everything, but For me, I'm more of an inefficiency trader, taking advantage of relationships and different stuff. There's no inefficiencies when the market's not moving, very few. So it's just a slower week. So I think when we get back into September after Labor Day, traders are getting back to the desk, getting back from their vacation. We're going to start seeing conviction in certain directions again. But we're in a battleground. This is a battleground between the Bulls and the Bears, and it's a serious battleground here again. Back in July, we were massively overbought. We sold off quickly in August, and some stocks became oversold, and we've bounced a bit off of that now. So now we're back to the battleground. Is the market resolve itself lower or higher? Nvidia really didn't give us a direction. The market was looking for direction off Nvidia. It didn't give us the continuation of the pop, but it really hasn't sold off that much either. I mean, we're kind of still in the same range in Nvidia we were a week prior to the company reporting. So we're kind of still looking for direction. Is like a Salesforce or a CrowdStrike going to give the market direction this week? Highly unlikely. Is a hurricane going to give market direction? Highly unlikely. So like we said, there's individual stock stories, but now Fed speak is done. I just think you don't have these major catalysts for this market to blast off into orbit or for this market to sell off. But catalysts can come out of the blue too. So you obviously still have to watch your news, but I'm still expecting quiet markets here, at least for the next week.
Yeah, well, let's put it, call it what it is. Jobs number on Friday, potential, not, and then later in the month, you have the CPI and the PPI, okay? And then also if you're looking
But we
at
don't have jobs this Friday. It's next
Yeah, it
Friday.
is. I was wrong, Dennis. It is this
Yeah.
Friday. I was
Oh,
wrong.
it is this Friday?
It is this Friday.
Oh,
It
okay,
It
is
is
good.
this
this.
Well, at
Friday.
least it's
I
something
was
then.
wrong.
Okay.
And then also, and I'll start my rant, the rollover rant a little bit early because your Friday is going to be the first. So it's going to be the first Friday. So our quad witch is going to be on the 15th. We're going to have an early quad witch. We're going to have an early rollover. So we got catalysts coming up. We just have to, stay focused and until then. But there are some catalysts for the market coming up in the next couple weeks.
Yeah, definitely. I don't know if you stated it, but of course we got PCE also coming out, and I think that's gonna
When's that?
that's Thursday.
It's this Thursday?
Is
Yeah,
it? Yeah.
so
Okay, so we
while
got a
core
couple things coming.
PCE and that could also change things up tomorrow. GDP estimate, the second read. So
Well, we got all kinds of stuff.
economic numbers are
The
mainly what's
problem
coming
is
in.
the traders aren't at their desks, so I think you're going to mute a response unless the PC is a crazy number or we get some type of number very much exceeding or very much not hitting expectations. I think there's going to be muted responses there too.
Well, let's go to Best Buy. In a surprising turn, Best Buy reports a strong Q2 performance with an adjusted EPS of $1.22, beating estimates of $1.06. Their sales of $9.58 billion also surpassed the expected $9.52 billion, while they adjusted their full year 24 guidance, tightening their EPS range and lowering sales expectations. Their resilience shined through even amid challenges, notably their Q2 comparable sales were down, with domestic and international sales both being affected.
This is not a great report, but again, Best Buy, maybe expectations were just simply too low because the stock actually was down into the report as well. 85 down to 72 in the last 6 weeks last 4 weeks coming into this report. But comps down 6.2%, domestic comp 6.3, international down 5.4, domestic comp online sales down 7.1. Holy cow, man. This is not the kind of stock I want to invest in when I'm seeing comps like that. Guidance was a little bit light. I mean, I think this is like a pass. It's like the Target pass. It was like good
Oh
enough.
yeah, look at Target now.
Exactly. And that's where I'm getting to. It's good enough to bounce it. People may be playing at the short side. It's good enough to bounce it for a day, maybe, an hour or two. I think they pull the rug out from under this thing eventually. And I may be wrong. Obviously we're in a slower trade here, but I'm not investing in stocks or in companies where comps are falling 6.2%. No, thank you.
That's huge. I mean, Target, they sold the pop and that. Even a Walmart had the good report. That's still off its its recent highs. So, good reports and bad reports. Just there've been sellers out there. It's been a seller's market. For the best buy, oh, you got to pop into the 77 handle. That was short lived. 4-day high 77.57. That's your pre-market high. Keep an eye on that. And if you want to try and buy the dip, I'd look at the top of yesterday's range. It's 74.39. That would be a gap fill for Best Buy.
All right, let's go to PDD. PDD's holding, showing its strength with a remarkable Q2, achieving an adjusted EPADS of 144, outperforming the expected 101 here. So good beat there on the EPADS, and we'll see if they can keep up with the recent move that we saw in China, right? We saw a little bit of a lift. And I'm keeping an eye out on these plays, especially if we can get more and more stimulus for the economy, the China economy we're talking about. They did also exceed on sales 7.2 billion, exceeding estimates of 6.07.
Great report. Often we do see these China companies usually beat. This beat big time here. It's a big pop. It's a stock that's held up very well in comparison
It
to a lot of
has.
other Chinese companies here. So I don't know if they're eating others' lunch or what it is, but great report here for PDD. I'm not chasing in this environment. Sorry, it's up $10. I'm not going to be the one that's going to bet it's going up 20. So I'm just not trading it.
I think anything over 90 here is gravy. If you took this long into the report or you've been holding on to it because you gapped down off, I believe it was off its last earnings report, and you're filling that gap right there. You had good support just at 90. Now you popped over 90. Big seller at 92. So I look at that. I can't buy this one up 10 and a quarter. Just quietly, it's
This
back
is
up
not the
to March
market.
high to
This is just
chase.
not the market to buy any stock up 10%. And sometimes they do continue, but more often than not, it seems like in this earnings season, if you're buying those stocks up 10%, maybe it goes up 12, 13, but in a day or two, they start pulling the rug out again. So it's been the one to sell the rip and not so much buying the dip on the earnings. So it has been a one-way kind of earnings season here. Expectations have been beaten, but not the investor expectations. And that's why we've seen a lot of stocks go down after the reports, and the ones that pop don't seem to hold. So it's a great report. It's hard to go short a stock on a report like that because it was really good, but I'm not buying it up here.
All right, let's talk about overall China. What do you think also about the other moves that are going off of this? Like Baba, as we talked about it yesterday, now it's back in the 93s. Does this have 100 written all over it?
No.
I don't know. Look at
Maybe.
that. Look at that chart. I
We're
mean,
just
look at that.
in we're just in shop. I mean, if you're
It's just
buying
too choppy, right?
the
Wait for it to
80s, the
break.
80s, we talked about this last week. In the
Yeah.
80s, maybe as a trade. Now you're up in 93. Now you're $6 up. So you're chasing it a bit now. Does it have room to 100? Could it go to 100? It's done it like 3-4 times. So sure, it could. I think if you're in it, maybe that's your target. I don't think I'm chasing it here though either.
Yeah.
Boy,
Just to sorry to
I'm
jump
sorry,
in there,
Mitch,
Joe.
because
No, that's my fault. That's my fault.
no, because I'm looking at this chart and
Yeah.
I want to get a number. I want to, and I'm just looking what it's done between 90 and 95. You know,
Mhm.
it's just been a zone of just like slice. Went down through that area. I would say I'm gonna look at this, and I know we were talking about 85 to 95, but I'm gonna try and narrow the I mean, or excuse me, 90 to 95. If this thing could ever get a sustained bid above 95, which it looked like it was gonna do at the end of July, then you're looking at a rally. But man, this is just such a accordion chart. That's the word that I was looking for. Baba, up today. We'll see how it ends the session.
Yeah, the only thing I wanted to note there was the monthly chart on the bottom right, of course, of Joel's. You see there, I see an
Yeah,
inverse head and shoulders there, and it just needs to get above 100 and sustain the bid there above 100. I think you can start reversing out of that monthly channel. Of course, that'd be kind of more long-term investing outlook, but
The
I don't
stock's
mind it
dirt cheap,
off of there.
Mitch. The stock. So with
Yeah,
you on the technicals, the stock is dirt cheap. You ain't gonna get anything cheaper. The only reason we'll keep saying it, the reason it's this cheap is the Taiwan
we
situation,
know.
which has somewhat escalated in the last couple of days. So they're starting to talk about it on CNBC. There's stuff happening over there. Here, it is still a major risk here for everything. Good points here. I mean, Spender was even making the point yesterday. I worry about, I don't want to buy these Chinese stocks because of the Taiwan situation. But, if Taiwan gets invaded, everything's getting hammered. So,
Yeah.
but not going to get hammered as bad as China. So I like Alibaba. I like the setup. I like everything about it, but I just don't know how to quantify that geopolitical risk. And I'll just keep saying that. And that's why I stay away. And that's what's obviously, and I've stayed away for a long time, which has been a good call. I mean, I sold this thing. I had Alibaba in the long-term portfolio for a long time, basically 5 years, probably maybe not 5 years, but 3 or 4 years. I finally sold out of it at 240, and everybody was giving me heat, saying like, it's gonna bounce back, it's gonna come back. And then I actually had a little piece. I sold the rest of it, I think at like 150 or 160, and that's where I really took the heat. And they're like, "Wow, you're doing it backwards. You're selling this thing now." Well, I mean, it's $93 here now, so it's been a great move to not be in that stock for the last couple of years. So, is this the turnaround story? We've been trying to call Bob a turnaround here for a long time. I mean, the media has been trying to call Bob a turnaround for a long time. Maybe eventually that happens, but I think it happens when she says, "Hey, we're not invading Taiwan." If that happens, it's green light go on all China stocks. Until then, it's red light stop.
Well, I wonder what you think about NIO. Let's get to their earnings as NIO faces a slightly tougher quarter, reporting a Q2 EPAS of a loss of 45 cents, missing the anticipated loss of 36 cents. Their sales of 1.21 billion also fell short of the expected 1.35. Despite challenges in vehicle deliveries, NIO remains optimistic about Q3, forecasting improved revenues and higher vehicle deliveries.
Just throw them all in the same category. I mean, yeah, this is a China one, but Lucid came off back down to the lows. Rivian, we saw the big move in Rivian. It's come off $6-7 from the highs here now. Fisker has never got it going here. There's so many of these things, so many EV makers. Like XPEV maybe has been the best of breed. It's held up very well and done some good things, but Neo's come off. I don't know. Like, is there anybody that's really going to compete with Tesla? It's not going to be VinFast. It's going to eventually come down here too when that story starts to cool off. But maybe you just got to look, you're paying ridiculous valuations for all these things. If you want to pay ridiculous valuations, you might as well buy Tesla. Not saying to buy Tesla. I'm saying if you're in that camp of paying ridiculous valuations for stocks, I don't know why you would ever be buying VinFast at being worth more than Toyota or as much as Toyota and worth more than the big three combined.
Yeah, that's incredible.
And you're not going to buy Tesla, which is not. It's making money. I mean, they've got it. They got lots of obviously potential revenue sources. They could grow into that valuation here eventually, but people want the hot money now. They're still out there. They're still going. They don't learn from their mistakes of the past that a hot story is fun to trade. You can stay in a hot story, but when the story cools off, you've got to make sure you're getting out quickly. And you kind of want to get out before the story cools off, because when it cools off, these things come down very rapidly. I mean, look at those, meme stocks from the last 3 years. Look at them all. And I mean, I don't know, they say AMC is not a meme stock. It's making new all-time lows. That's honestly unbelievable. Can you believe that, Joel? With all this talk of AMC, the stock is making new all-time lows. I can't even believe that. After all this, after everything that it's done, it's down 98% from the highs. So everyone now has lost money. If you bought that thing ever, when stock's making new all-time lows, it means everybody, if you're still holding it, you're down money. GameStop's down to $17. Is it going to continue to implode and go down?
Yeah.
It's held up fairly well, but it's $17 too. So I mean, it's still held up well. It came from like $1, so it's still there, but down from 120 is not fun. But then all the other ones, like even that short squeeze, oh, we're going to squeeze them, we're going to squeeze them. But in the end, the longs get squeezed. We know how these stories end. So it's same thing with VinFast. There's no float. Can't get a bar. If you can, it's 300%. So shorts aren't keeping it in check. Story's hot, gets hot for a bit. By all means, if you want to trade it, but don't get stuck with it, because when the music ends, you don't want to be the one without the seat.
Oh, the old mute button.
He's still on.
It happens.
He's
It
got
I
a
happens.
know, I
keyboard
know,
or
I know.
something. You
Because
It
got
happens.
something
It
then you
happening.
happens.
yell at me if I drink my water. You're like, you're slurping into the microphone, and then you guys are just like, I was trying to decide. We talked about Neo, and you guys just got about 6 or 7 stocks in there. So I just was like, what the hell am I talking about? Neo 1050 was major support. And now I'm calling it resistance. So if you get a pop, you got to get above 1050 and hold. Not much in here on the downside here, under $10. There was a low at 979.
All right, let's go to Big Lots. Big Lots managed to beat expectations with Q2 adjusted EPS of a loss of $3.24, outperforming the predicted loss of $4.12.
Oh
Their
gosh.
sales of 1.14 billion also exceeded the expectation of 1.1 billion. The company is showing resilience as they look ahead to Q3 and Q4, projecting improved sales.
Holy, this is got to be one of the worst stories from Bliss. And if we go back 6-7 years ago, Big Lots trading all-time high, $70, not even 3 years ago, $70 a share. And they have just ruined this company. They've ruined it. They can't figure out what
Man.
they are anymore. I used to, say, when I went there years ago, it was like the discount store, like the box, and I say the Aspen, the Crush. They give you discounts, because stuff has been, just bent. The box is bent on the shelf or something like that. Now they've tried to upscale the stores, make them look a little bit nicer, and they don't know what they are. They don't know what they are anymore. They've lost their way. Big Lots is just a disaster. I think all rallies to be sold. It would not surprise me if this company is eventually bankrupt.
It's a pop, and you got just over 740 here. It's like 741. So I use that as a level. Just a big down, just such a down streak here in the stock. People are underwater. And there's another pair of highs at 765. So first things first, take out that pre-market high. A lot of people stuck in this one. If you're looking to buy it, man, you got a long ways to go back to the top of yesterday's range. Actually, it broke quite a losing streak yesterday of they've been lower than the open, but make sure you take out that pre-market high, and I wouldn't be a buyer until we got near the top of yesterday's range.
So many better places for your money.
Exactly.
JM Smuckers, I need some jelly on it. Let's take a look. JM Smuckers proves its metal, posting a Q1 adjusted EPS of $2.21, surpassing the estimates of $2.04. However, their sales of $1.8 billion missed the anticipated $1.84 billion. Their outlook for full year 24 remains positive, with expectations of growth in comparable net sales and adjusted EPS. Do we go to the value names? Is that what we're looking at now?
This isn't a value name even is the problem. It's a consumer staple that's defensive. And the consumer staples I've been arguing for a long time, better to be in cash than consumer staples. Nice pop, nice check back, major resistance at 150. I just don't think this is like it's something you want to chase.
$3 off the pre-market high. That is not a good sign. So if you're buying this up $5, well, you're getting your head handed to you. Top of yesterday's range would be a potential buy area, 143.67. That's really about it. You're so far ahead of so far off the pre-market high. I think you even got to look at, like, if you get a pop into the 146 handle, I think you'd be lucky. 146.57 was your August 15th high. S&Ps are leaking here, Dennis, just kind of trying to rally, but now we're in the red on the lows of the pre-market session.
Well, if you guys are looking for a job, maybe Bath and Body Works is going to be on the radar as their holiday season is approaching, and Bath and Body Works is preparing to hire 30,000 seasonal holiday sales associates. Of course, this is going to be opening up on August 29th. Could this continue to lift BBWI? It's getting a little pop here in the pre-market.
Did you say 30,000?
Yeah, 30,000 seasonal holiday.
What for the that's a lot to hire for the Jewish holidays.
You know how it is, man. They want to sell them candles.
I don't. I'll let you guys run with this one. That
I'll go buying some
Go,
candles. I'll tell
Mitch.
you that much. I mean, one thing that I could say is that remember this used to be the Lucky's brand, right? Back in the days, this was the combined. Was this the combined? I know, Joel.
Not,
You had this. This was when
not,
they
not.
store.
Yeah, I know. I got this in one of these my portfolios. What the heck was the name of that
What was
stock?
you're gonna get like Victoria's Secret from this?
Yeah, it was
Wasn't there a whole
Victoria's
bunch of
Secret
stuff in there, and then
and
they
It had
Bath
it.
spun it
and
No,
off.
Body
You got
L
a bunch
Works.
of
brands. It
stuff.
was L brands.
L
L
brands.
brands.
L
Yeah,
brands.
yeah.
There
And
you
then
go.
they gave you Bath and Body Works. This one
Yeah, I
came
don't
from
even
there,
know.
and Victoria's Secret was that in there too? Was that all in
Exactly.
there?
Victoria's
Yeah, that's
Secret. They've
Yeah.
gone pretty
VSCO. I
much
gotta get
nowhere
this stuff
since
out.
there. I mean, they haven't done well since that. That's for sure. And I think that these companies are just at the point that they're what? They're mall stores. Mall stores are not what you probably want to be a part of right now. If they can adjust to more of a direct to consumer base, then maybe that could give them the lift. But I think the writing's on the wall for a lot of these brick and mortars that are stuck in the malls.
Wow,
Uh,
women must not be wearing underwear anymore. Look at this Victoria's Secret. Holy man. You, Dennis, you did say you were going to go on my account and sell this. I can't remember when it was. I should
a
have
long
let you.
time ago. Where I haven't even
Yeah.
looked at it.
This is it.
$17. Retail's just a disaster. Let's call
Malls
it
are
what it
dying,
is.
right?
Amazon has come in, destroyed all these companies, and long term, that is what has happened. So, I mean, there is very few retailers, traditional mall-based brick and mortar retailers, that are sitting up at all-time highs. Maybe except Dillard's, because I don't know what Dillard's does. So they're the one exception. Maybe Abercrombie and Fitch. There's a few exceptions out there, but overall, your Kohl's, your Macy's, your Nordstroms, your Bath and Body Works, your Victoria's Secrets, whatever, you pick your poison. These traditional mall-based retailers, your Foot Lockers, have been terrible investments for a very long time.
Man, I think AEO and ANF never got the retail memo because holy crap, those things just look strong, and I
Yeah.
have no idea why. Like, I really don't. I think even analysts are scratching their heads on those moves.
They can't sell everything.
Yeah, I guess that's what it is, right? Let's go to some upgrades, some notable upgrades and downgrades. Let's go to Citigroup coming out here with a couple of them, upgrading Verizon communication to buy and raising price target to 40, and then also coming in for AT&T and upgrading them to buy and announcing a $17 price target. I know these are interesting stocks to Joel. And we know how Dennis feels
It's
about
like
AT&T.
the show today is like all talks about all the stocks that I absolutely despise. Like somebody was just
Despise, I
commenting,
knew it.
these guys are so negative. I'm like, this show was just set up for me to hate every single one of these stocks. We're talking like meme stocks, and we haven't even got to Shoe Carnival yet, but Big Lots, I despise it. I mean, and then you get, AT&T and Verizon, which I've hated for a decade here now. Again, are they going to get a pop on this? Sure. They haven't had any analyst love. So let's give the bullish scenario. These stocks are massively oversold. They haven't had any love for a very long time. No analyst love. Like, I don't remember the last time AT&T
I don't
Verizon
remember
got an
either.
upgrade to buy. So
Nope.
is this going to get some headlines? Could this lift these things? Are they oversold? Is there a 7.7% dividend? All those things are good. The core businesses are under attack. The core businesses are under attack from streaming. I think long term, AT&T and Verizon go lower. I think you could have their day. I think AT&T could see like $15 again, maybe off of this. Maybe not today, but they're so oversold. But is there a long-term investable story here? I don't think so.
Just for the Verizon, you got a little pop over 34. And so if you could hold 34 on a bid, maybe some more upside here, work your way into the 34 handle. AT&T, the ranges are so tight that you could hardly give any levels. I guess there was a pair of highs at 1435 and it's breaking out, but maybe we'll just catch someone's fancy today, right? There's not much else going on in the market. So getting a little bit of a pop, halfway decent volume. So I guess if if you're looking for things to buy, they're also a little bit defensive, and we do have a down market, just a slow leak here in the S&Ps. Now distancing ourselves from that closing price, down
Yeah.
8 handles, just leak, 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 leak.
It's
Yeah,
definitely a leak
like
here.
Kaylee says, we do this show, Dennis, just to troll you. That's what we do it for.
Yeah, they
All
set me
right.
up here today. I'm like, are you kidding me? Now we're gonna talk. Now we're gonna talk AT&T and Verizon. I'm like, holy
Well, let's
mackerel!
take it to the one you just mentioned that you hate. They're the disaster stock of the day, Shoe Carnival. Let's take a look here. Q2 EPS at
Retail selling
71 cents,
shoes reminds
misses
me of Mary
84
Building.
cents estimate. Sales of 294.62 million, beat the 286.35 million estimate. Comparable store sales were down 6.5%. They cut EPS guidance from $3.60 and $3.85 down to $3.10 and a high of $3.25. The consensus out there was $3.12. So looks like this carnival is shutting down.
That was kind of funny, man. Oh, whatever. I guess it's discount shoes if you want to go into there, but I'm just not into retail.
No more
It's great
Payless, man.
support down. Let's just call though. You got the multi-year low here at 1924. So you got some really good support here. And this actually coincides with the 1942 from 2022. If you go farther back than that, you got to go back into 2020. But 20 was old support. The old resistance becomes new support. You got good support down here in the 19. So the technicals actually you're at support. With that being said, they sell shoes, retail strip malls, shoe carnival. It doesn't sound
Dennis,
investable to me.
I know this is really one that's not really on your radar, but I mean, you talk about your pre-earnings runs. I
Yeah.
mean, how about like what Foot Locker did? I mean, people just aren't buying shoes. I don't see how,
They're buying
after
them online. They're not buying
yeah.
them from traditional retail stores. People are still wearing shoes. They were not going back to the caveman where we run around barefoot outside, except unless you're my kids, because I yell at them all the time for running outside with no shoes on. Then they go, "Oh, my foot hurts." I'm like, "Well, you're running around outside with no shoes on." But normal people are wearing shoes outside still, so they're still buying shoes. They're just buying them online. And the young teeny boppers, the YOLO, whatever you want to call them, the millenniums, they all will buy stuff online. They're not scared to do it. I want to try the shoe on. I would still actually go into a store to try the shoe on, or I'd send my wife to go and then she'd return it if it didn't fit. But in any regard here, they're not scared to buy clothing online, and that's not good for any of these brick and mortar retailers.
Look at Skechers, man. I'd be like, oh, keep an eye on 48 and Skechers.
Look at
That's been
Crocs.
oh,
Crocs is like best of breed. They actually did well in their quarter, and it's
It's not
96 bucks.
shoes
When
with holes,
when
man.
you're doing well and they're knocking you down 30% after, I mean, this is
Dennis,
tough,
you didn't hear
tough
about
industry.
the secret. They're just gonna cut down on materials and cut down on spending, make more holes in the shoes. Ha ha ha.
Maybe that's gonna work. I think the Crocs is doing fine, but they just hate all shoemakers. They hate retail. Like there's
Oh yeah,
Abercrombie
man.
and Fitch,
They
and
don't like it.
Dillard's, and the other one, Urban, was doing pretty good. But majority of retailers, they just don't like. The Best Buy, it's popping today because
It's all about
expectations are
decks,
so
man.
low.
It's all about decks if you're in the shoes. Deck outdoors. That's actually been turning around.
oh, you mean the winter
Yeah,
shoes that
the
you
outdoor.
yeah, that
Deckers
you
Outdoors.
yeah,
Deckers
yeah.
outdoors,
well.
man.
Pretty
Dang,
good.
look at that monthly chart. Those are the ones I want to be invested in. All right, guys. I wanted to ask you guys really quickly before we get to our guests. So you guys smash the like out there. We got Ryan Dietrich soon to come on. Let's talk about 3M right quick. Of course, they finally reached the agreement to resolve the combat arm earplug litigation. We've talked about this yesterday, but finally we have the number here. They'll contribute a total amount of $6 billion between 2023 and 2029. The way this is structured under the agreement, it includes $5 billion in cash and $1 billion in 3M common stock. Just to mention, Wolf Research did come in today and upgrade 3M to peer perform. But what do you guys think about 3M here?
Wolf.
Ow.
Again, we said it yesterday. If the settlement actually settles, that's really good news for the stock and could be a lot higher. I want to see the settlement actually go through, though. I don't want to see talks about a settlement or, here's the proposals. I want to see it actually go through because we saw what happened with Johnson & Johnson. They're proposing. Now it's all off the table. Now they got problems here again. This earplugs thing is holding the stock down. The stock is dirt cheap, 3M, from a fundamental basis, from a PE basis, whatever you want to look at. It is cheap. They're still a good company, but this earplugs thing has to get figured out. I'm not buying the stock until it is actually officially settled.
It sold off yesterday, kind of reiterating the news again today. So keep an eye. Never even traded over 106 yesterday. Oh yeah, I did. It traded over 106 in the pre-market, not in the regular session. So look for yesterday's high if you could get it 105.65, and then you don't want to see it go unchanged here at 104.12. Yesterday's low 102.59.
Well, you guys have been hearing me say, show me the money. What about show me the numbers? Let's go ahead. Let's bring on our guest today.
Ryan Dietrich from the Carson Group, better known. Does anyone else call you Statman Do besides me?
I think you're the only one, but I like it. We can go with that. It's good. It's good. There we go.
All right, so bring us in here. People say we're being too negative, talking about all these crappy stocks and everything. There are some good ones out there. You got to have some stats for me for August because I can't remember a month where we've only had, even in the down months, only 2 2-day winning streaks and not 1 3-day winning streak.
Yeah, those are it's amazing. I mean, and actually I don't quite have those numbers, so maybe Statman Do failed you, but you're right. I mean, it's been a long time since we've gone a month without just 2 up days in a row. Now, fortunately, we do have 2 up days. Now, I did bring some charts. Let's see here if I can figure this out, guys. Give me 1 second. Present. Share screen. We're getting there. So I got a new computer. I did something not too smart last week. I poured an entire glass of water on my old laptop. That's one way to help the economy, I discovered. But I do have a new computer now. Hopefully, you guys see that. That look familiar? All right, we good?
We got you, my friend.
All right. So anyway, I said you've seen this before. I think I've come on with you guys for a long time now, and I think I've started with this every time. And believe me, I understand there's a lot of other things to pay attention to, but it's fascinating at how this is played out. It's the 4-year presidential cycle based on quarters, and the last couple quarters were some of the strongest. We're up 7%, 7%, 8% on the S&P. Sure enough, here's the third quarter of a pre-election year. Not all that great. And that's what's happening. Now, you mentioned August, and one of the things I've been calling you guys, all year saying, listen, we're bullish, we're bullish, we're bullish. About a month ago, we started to see some of those long-term bears kind of throw up the white towel, kind of say, oh, we're sorry. Like, Mike Wilson, some of these people saying they're sorry. I was like, that's interesting. So we started talking about, hey, be open to the idea of some volatility and downside action. Because when you're up at least 17.5% for the year going into the normally weak month of August, S&P's only been higher 3 out of 11 times with some really big drops. Now, I know the month isn't over yet, but, you could say that's kind of playing out once again. And then as everybody's going to talk about, September is not all that great either. So we're in this time frame where it made sense to us with some of the over-the-top excitement that people finally had that it could be time for a break and consolidation. That's perfectly fine. That's where we are right now, and that's a good chart. You'll hear some other ones. I maybe shared some of these before, but, when you're up 10% for the year, the first half, what tends to happen right now is the upper left, you consolidate around now. When you have a big January, I think that's the one on the bottom right. Yeah, a big January in the bottom right. You tend to consolidate now. I mean, these are just some little clues maybe that we saw that hey, we've had a great run, but it'd be normal. Now, the other thing I want people to know is it's normal, I think, for after this consolidation to kind of work your way higher. We don't see any reason to expect that we're not going to break out to new highs later this year. We've just kind of got to get through this the seasonally weak period as we catch our breath. And here are some of the, over the top bullishness, run with the bull. We had, Morgan Stanley, a strategist, saying now's like 2019. This is like, a month ago or so. The Bank of America, what's it called? It's Bank of America. I don't think Merrill Lynch is in there anymore. Global Fund Manager Survey. Bottom line, a lot of people were skeptical. Then they started to become more bullish. And sure enough, just like that, the calendar changed. And we've had some of the issues. Now, one of the other things is just these overhead resistance level. I've got semiconductors there. I've got housing and what else? And technology. They were at some logical areas probably to take a little bit of a break. These are some of the big leaders. We know that big parts of the market. So now here we are. And again, it just makes sense. We're taking a break. Do we expect these to eventually give way to new highs? Yes, we do. But we might need a little more time, right, before we can get there. Now, here's the S&P 500 chart I've been using. 4,300 is the peak last August. 4,328 is the lows of June. A lot of reasons we don't think we're going to go below that. We think we're just kind of caught in this frustrating, choppy range. So some support there at the bottom. I've got a 10-day put-to-call ratio of equity put-to-call ratio, highest we've been this year. So again, finally some skepticism coming in. The AAII sentiment poll, more bears than bulls for the first time in 12 months. The NAAIM survey of active investment managers, they are the least bullish they've been all year, and they were wildly bullish 4 weeks ago. So again, all these things kind of added up to maybe it is time for a little break. Now, volatility is normal. I'm a market strategist, like to point these things out. You tend to see even some of the best years, guys, have seen 10% pullbacks during the year. I mean, that's something to remember. You have about 3 separate 5% corrections a year. You have a 10%er once a year on average, right? And you have almost 3% dips a year. Now, believe me, these are averages. I'm aware some years are different, but just the idea that we've had an 8% correction earlier this year when the regional bank crisis was going on, and now close to a 5%. I don't think we quite got there recently. It just made sense that, some volatility is perfectly normal. One quick one, up 5 months in a row on the S&P. Eventually, you're going to have a down month. It's probably going to be this month. But you see here what happens a year later, higher most of the time, up, 12.5% on average, even higher on a median. So after that blast of strength we've seen, we're still overweight equities. I came into this year overweight equities, talked to you guys a lot about that, why we were there. We still are there. We think we're actually actively talking about adding a little bit of equity risk right here. On this pullback, on this 5%er we've seen, because we don't think it's going to be much more than that. And the one before, I did skip it. We can touch it very quickly. Credit markets, triple B spreads are not blowing out. If the monster was under the bed, I just think we'd see more stress in the credit markets. We're seeing junk and high yield outperform treasuries, outperform investment grade. Hey, we've had a big pullback in tech, a pullback overall, but the credit markets are not necessarily worried, which again is a positive thing. I'll go very quickly on this. We'll bust some myths very quickly. These aren't necessarily trading charts, as big picture things I think people to think about. Again, I am a strategist. Household debt to income's actually been going lower. All we hear about is all this debt. Well, income's actually been increasing more than household debt over the last year. I don't think a lot of people realize that. China is going to sell all our debt. China's going to, all this issues with China. China's going to slow down. What does it mean for the U.S.? But you can see on the left here, as a percent of GDP imports, we don't import nearly what we once did from China. Our take is this: we are not nearly as impacted by China as we once were. And the next one here on the right is what I want to show you. How much of our foreign debt is owned? China owned over 20%. The 2014. Now Japan is the largest holder of our debt, and China owns about half as much debt as they did. So you hear on TV, China's just going to sell our debt. They've sold a lot of our debt relative to other people, or maybe other people added more debt, what I should say. But I think that's an important concept that people aren't talking about. The one on the left here, vehicle manufacturing. Hear all the time about these manufacturing surveys, right? ISM survey, PMI surveys. They're saying one thing, but then you look at the real hard data. We're creating as many vehicles on an annualized basis right now as we were pre-COVID. Okay, so that's something I don't think a lot of people realize. We're opening up supply chains. Things are coming in. And then I think it's the last chart. I went pretty fast, I know, but so I do it. This is what's going on with high-tech equipment. Okay, I mean, we are seeing that. Yes, you could say it's a CHIPS Act and some different things going on, but manufacturing is really soaring, up 7% year to date. Production for medium heavy trucks up 14% year to date, and aerospace production up 4% year to date. If all you looked at was the soft data, you think we're in this massive manufacturing recession. We're simply not when you look at some of the other factors that are out there. So yeah, there we go. There we go. I went pretty fast, as I always do, but I'll take a breath and let's talk a little bit. What do you guys think?
Okay, after getting your 6-minute presentation, which was awesome, by the way, I want to buy the dip now. What sectors? So you were saying you kind of would be adding equities, so we know you don't like talking individual stocks, but what sectors here, Ryan, would you be focused on?
Yeah,
buying the dip.
Great. Yeah, I mean, we, again, as I kind of hinted at there prior at the end, we don't see a recession. We were one of the few places that came into this year saying, hey, stocks are going to have a good year and we're going to avoid a recession. People are coming around to that. So we still think your cyclical value in your small caps. I know small caps have pulled back recently. Don't have the chart of it. But, small caps, Russell 2, for instance. I mean, kind of stair-stepping higher. That relative strength relative to versus large caps is still above a long-term trend line. So we think small caps make sense. People just seem to hate them. We like mid caps as well. Then the cyclical areas, or we like energy, right? I know you guys talk a lot about energy. A lot of people probably come on this program talk about energy. Energy makes up, 4% of the S&P. Energy stocks stocks would go straight up and it wouldn't really matter because if energy and comms kind of go sideways, we're more neutral there. They wouldn't do as well. So we really like energy, industrials, materials, smaller parts. Well, that's industrials aren't such a small part, but materials, energy are clearly a small part that honestly won't move the needle when it comes to the market. But those are some of the areas we are overweight and looking to potentially even add a little bit more. That's how we see things.
Ryan Dietrich from the Carson Group joining us here on Pre-Market Prep. All right, so I'm going to throw a little monkey wrench in your analysis here, okay? So all those stats and all those things that you've looked at going over the years, and there were some time periods, there weren't other alternatives to the market.
Mm-hmm.
Now the Tina trade is dead. I mean, you're talking about adding some equities or doing things. I mean, there's some real headwinds in the market as far as where people don't have to be in the market. Can you identify some time periods where, you know, the Tina trade's been dead and the market is still absorbed inflows?
Yeah, I mean, well, great question there. I mean, I guess we're talking about 5% in the money market, right? You can go put money in a money market and do just fine. I mean, 10-year yields up over 4%, give or take, wherever it is right now. I mean, let's not forget in the late 90s, we had higher trending yields. We had an economy that could grow in the face of that. We obviously had a really good bull market then. So that's one time that jumps out, I guess, off the top right now. And again, that was a period where the Fed was hiking in the mid 90s and they stopped hiking. And then the late 90s got a little wild. I'm fully aware we're not predicting another late 90s scenario, but though that was one time that I think things really did kind of play out a little bit. And I work with a really smart guy named Sonu Varghese. He's our chief equity, or what is he? He's our chief macro strategist. Sorry, Sonu, for not knowing your title. But nonetheless, he's been saying there are some similarities with the mid to late 90s, what we're seeing right now with kind of what the Fed is doing and kind of what rates are doing. And, you know, we're not saying it's going to be a blow off top like that, but there's some reasons to still remain overweight equities in our opinion. And we've been underweight bonds. I mean, we've been underweight bonds all year, right? And a lot of people are saying, oh, we kind of like international. We said, we're not so sure there. Or emerging markets. Oh, emerging markets are cheap. We've been heavily overweight United States relative to the rest of the world, underweight fixed income, overweight stocks. And we think that's been the way to, looking back, it's been a nice way to be so far this year, but we still think that's still the way to go.
Of course, we've had some really good performance in the first half of the stock market, and I'm wondering, is that the peak for the year, or is there potential factors that could, drive us even greater in the second half here, Ryan?
Yeah, I mean, we don't think the peak is in. I want to be clear there. We do think, eventually by October, November, we'll probably break out the new highs, which you tend to see. And again, I'm going to use the F word. That's okay. Fundamentals. If you look at just earnings, right? We know I just had a great discussion. I mean, believe me, this retailer thing, these retailers just getting hammered yet again. Then you look at the online sales, look at what Walmart had to say, look at Lowe's had to say. There are some retailers that had some positive things to say. So it's very, very unique. But I mean, the truth again is, there's these different factors. I just went blank. What'd you ask me? I'm sorry. I started talking. What'd you ask? I was going to go, new
I do that all the time.
I started talking about something.
No worries. Performance second half.
Yeah, I mean, but yes, we think that we will eventually break out to new highs. We think, again, earnings, where I was going with this. That's where I was going with it, earnings. If you look at earnings expectations, right, they're up 2% from the start of earnings season. Earnings season is like over. So S&P 500 earnings expectations have actually gone higher. Maybe what companies had to say about the past wasn't that great, but what they've had to say about the future has been solid. And I understand, well, they're not always that great looking 12 months out. I'm not going to totally disagree there. But again, we're seeing higher trending 12-month earnings expectations going higher than most people wildly expected this time 3-4 months ago. So if earnings continue to come in better than expected, those credit markets remain nice and calm, no major monster under the bed. Those are still things that say, this has been a dip that's shaken out some of the weak hands. And once we get through, say September or so, we wouldn't be shocked at all if the fourth quarter was pretty solid.
What would you avoid? What would you absolutely run from right now?
Mm-hmm. Well, you say Jim Harbaugh, Michigan football?
Oh!
No.
Because we're going to...
Shots fired.
No. We haven't liked for a while the more defensive areas, right? Your utilities, staples. Boy. I mean, some of those we haven't liked them for a while, and they're still relatively weak in our opinion. So I'm not saying we're running from them. We have them in our models that we run, but we've been underweight those more defensive areas. We still think more of a cyclical small cap is the tilt that we have, and that's kind of the place that we are.
Who's going to be the starting quarterback for Ohio State?
That's a great question. We could talk on this all day, but everyone thought it'd be Kyle McCord because he's the guy that's been there for a while. And the fact that they have not announced a starter yet, the fact they're looking at doing a platoon really makes you think that the younger guy, Brown, might be the one to take it. So we'll see. Although McCord, again, don't need to spend too much time on this. McCord was a high school quarterback for Marvin Harrison Jr. So, there's some connection there, but hey, it is what it is. We'll see.
There's one guy that scares me in Ohio State, and that's Marvin Harrison Jr. Unbelievable. I'll give him credit where credit's due. Okay. Ryan Dietrich, Carson Group, a longtime guest on the show. And I just want to add that when Jason's been on the show, he talks about like when he listens to interviews, he plays them in like triple speed. With your interview, he doesn't have to play it in triple speed.
Yeah, I'm trying to help.
You're already there. Man, we appreciate you so much. And maybe we'll get you in Ann Arbor this year for that Michigan-Ohio State game.
Oof. I don't know. It sounds cold up there. I might watch it in the confines of my house. You guys would be mean to me up there. I don't know. We'll see. But it'll be fun. Yeah. It is exciting, though, isn't it? I mean, college football started. But Notre Dame already played and USC played. But, pretty exciting time of the year. And once we get through it, maybe markets will continue to go up a little bit, too. So it'll be fun the rest of the year, I think.
I'll tell you my Ohio State story
when
I went to Columbus, but I'll have to do it off the air. Ryan Dietrich, Carson Group, joining us on Pre-Market Prep.
Thank you.
All right, let's get back to the markets. Let's take a look at what's going on there. And man, that Ryan Dietrich, I gotta say, that presentation that was. I don't know if he brought in the Ryan Dietrich AI. It's because that was like, does he even breathe there? I was like, man, he killed it there. So I would definitely
run for sure. Talking
like
fast.
the chat said, rewind that and watch that all over again if you didn't get all of it, right? Hey,
Dennis,
you turned me bullish.
Dennis, Dennis, at 9:43, you could be like super bearish again.
Yeah. We all know how that one works, Dennis.
Would you stop with that choppy market? We go down. We look like we're going to start in the red, 44.33.50. Now we're 8 handles off this. I think you just have to just be prepared today. Range trading is what it's looking like right now. I will say Best Buy has caught a bid here. And now it's up over $2 here. So might get a look at that.
Remember the target, though? In the target that day, we opened like 128
and
ran up to 135. And then held on for 4 days before breaking. So don't think it has to break right away. Don't think like these things. I just think when you look at this 2 weeks from now, I think it probably gives it back.
Okay, last one I wanted to cover was an upgrade on Oracle. It came from UBS, upgraded Oracle to buy and raising their price target to 140. This has been looking pretty well, even though when tech has come down, this has gone sideways here. Now getting the lift, especially with this analyst note. Can this keep pushing?
I think this was the first ever stock that I long-term invested in. Like I opened up my registered retirement savings plan in Canada back in like the year like 2000, so like 23 years ago. I'm pretty sure Oracle was maybe not the first, but one of the first stocks that I ever, like I was already trading, but with the intention of like never selling. And believe it, when I first started, it's a funny story. When I first started that long-term investing account, I was like, I'm never going to sell any stock out of this account ever. And my first like 6 years, I never sold any stocks out of that account. And a lot of them grew really well. And then the financial crisis happened. And I'm like, I'm never doing that again, man. I'm never just holding on forever because I watched that account grow and grow from like 2000, 2001, 2002, 2003, 2004, 2005, 2006, 2007. I watched that account grow and grow and grow. And I'm like, this is the way to do it, long-term growth. And then 2008 happened and the S&P, and people don't know this, fell 66% from the highs. It fell 60, or it's 62, I think it is. The S&P. So not, some stock. The S&P fell 62%. And I watched that account that grew for that 7 years go red. And I'm like, this is just ridiculous, And then I'm like, you got to take the gains while you got them. You can see, the huge sell-off there. And thank goodness I actually did buy some stuff during 2009, 2010, 2011. And those obviously worked out to be very good buying opportunities. But I mean, it kind of taught me that just buy and hold. Maybe it taught me the wrong thing. And maybe if that would have never happened, I'd still have, some of these stocks that I bought from 25 years ago. but man, it really ticks you off when you see account build for 7 years and then go red. That's what the financial crisis was all about.
Okay, let's start doing our wrap up here. How do you see the markets? Let's go first.
They're talking VFS.
Man.
Do we really need to?
Yeah, because it's fun. So
I don't think it's fun. I don't
93
trade this thing,
yesterday.
man. Come on, guys.
You don't want to talk this stock? We can forget it.
No, we got it,
They're all
man.
talking
can
it. They
talk
like
it,
talking
but-
it.
This is my thing. I just want everyone to remember, just as much as this can go up in percentage, it can come down in percentage
Oh, yeah.
also.
Let's do it
So
right now.
I want some traders to remember that if they're playing with this. This is one of those that I feel like is a percentage chase. Retail just trying to chase that percentage gain. Just be careful with that.
Wow.
What do you see on the levels, Joel? Do
Joel,
you see
can you give
anything
us a
here?
technical on VFS, or are you taking a pass?
No. I'll give you one number.
Okay.
The all-time closing high, 68.77, is half. It's a
Well,
half
closed
star
higher than
support.
that yesterday, 82.35.
Yeah, well, that's where it's going. It's going to trade there this morning. I don't know for sure that it's going to trade there this morning, but it's down $10.50. So that would be the first place that I would consider putting a bid out there if I was short, not to go long.
TLT.
Any
is
comments,
selling off
Dennis,
here.
on that?
Yeah, that's
No,
what
I
happened.
don't care about VFS. So TLT. selling off a little
Oh,
bit
you
here
don't
this
care
morning.
though.
I
see
just
this,
brought it
Joel?
up because the chat wanted to talk. And
You see
guys
this,
talked
Joel?
it. The Vietnamese automaker.
Oh man.
I'm not investing in it. Sorry. And
All
I'm
right,
scared
Dennis.
to trade it. I'm not investing in it. I'm scared to trade it. We'll say that. I'm even scared to. It's got me scared to trade that. I'll trade anything, but I'm scared to trade that stock.
TLT and the
fell off a
bonds
bit.
have clear resistance. So TLT is a much better vehicle. Look at that. You got clear resistance and you're off it here at 95.5. And the bonds got that too. So until you get through 95.5, man, still pressure on the TLT and the bonds.
All right, Dennis, your last outlook for the market.
Chop. I think you're going to see chop. And I'm not chasing moves here. I'm just kind of, going, a little bit of, short-term contrarian where we're seeing moves, not maybe on the news stocks, but moves that are down. Maybe you're buying a little bit for day trades off if you can find some supports and resistance. But I think you're going for 2-3%ers. I don't think you're sitting around here trying to make a 10-15% move here in the next week unless you're trading an earnings stock. But if you're staying just, with the overall market here, I think expect the chop. Don't chase. This is not the week to chase stocks.
For me, I'm just looking if the S&Ps could go unchanged and hold unchanged at 42.25. We still have a chance for our first 3-day winning streak since late July.
All right, team. Joel, who will we have on tomorrow?
Eric Kroll. He is a life cycle trader. We've had a little bit going on in IPO land, so we'll talk about VFS with him, and the other IPOs are out there. Get a look at some of the ones from earlier in the year. So he's another one up there of the super prepared guest is Eric Kroll from the life cycle.
Love it. That's going to do it for us on Premarket Prep. Like always, stay tuned here for more on Benzinga. You guys can keep up with Joel Elconin, Dennis Dick, at Spoos, at Triple D Trader. Give them a follow on Twitter. Now going to wrap up the show and let you guys know all about the Raz Report with Kathy Wood. You don't want to miss that. That's going to come tomorrow, Wednesday, 2 p.m. Eastern. Don't miss it, team.
We have a very strong point of view about what's going to happen to interest rates. For every dollar in hardware that artificial intelligence causes to be spent, there will be somewhere between $8 and $21 in software. Well, we think Cybertruck is going to expand the truck market.